There you go. All right, you guys. So let me break this down real quick. So this is the daily for the S&P 500. We we gotta have a story to this. We gotta have a story to the market in order to understand the market. So last week, there was no data Monday and Tuesday. There was only data, and I believe it was either initial jobless claims too, or some sort of jobless claims or job or labor market data. It was also sort of bad. We also had data on Friday and Thursday and Friday, I believe, and they were sort of light, not that crazy data but one, but it wasn't scary numbers. Anyways, but the big move was Trump. Trump was gonna go to China and they were gonna have a talk. He was gonna take the boys, the fucking just coming in with the squad. And that was your Wednesday, your Thursday. So here you have Monday, Tuesday, nothing happened. But from Tuesday night coming into the morning, that's when we come into, the trip. And we also created 3 candle box right here. If you've been watching my videos, this is what I look for right here. This is a beautiful 3 candle box explosion. This is where people get. This is where institution banks come in and liquidate fucking people because they don't either and here's another 3 candle box, a perfect one over here too. You have the market then coming in, taking all these sales down here, coming back up and shooting. So you had Trump, and then what happened overnight? Thursday night, you had yields. Yields went up. Holy shit, people were scared. And then from there, we come into this week, where again, no data on Monday, no data on Monday, and no data on Monday, and no data on Tuesday, I believe. Only on Wednesday, and on Wednesday there was it was the Fed at the FOMC, and Nvidia. Nvidia was the main thing we were looking for. It's like if you know your birthday was on a Wednesday and you're getting 2 gifts, somebody already told you that one of them is the the small one is actually the real gift, and the other gift is a sucky one. The big box is some lame ass toy. So you want the small box. You know which one you're looking for. So when the FOMC came at 11 o'clock, that's what the market didn't spike up, but was getting their hopes up and anticipating the good news and was rallying up an hour and a half, 30 minutes before it wasn't doing that. But once we came towards the end of the day, Nvidia, that's where you also saw a strong push. Since Nvidia didn't make no good earnings, it made good earnings, but not this fantastical fucking report where people thought the Nvidia normally has where it's gonna spike up and a lot of people were going for buys or whatever, but it didn't have that explosion. So now what we're looking for is we were looking for this whole war thing because on Tuesday, either Tuesday or Wednesday, I believe it was Tuesday. Let me see, ChatGPT. They announced, hey, um, if you guys don't make a deal with us, I'm gonna attack you. Um, he was supposed to attack them on Monday. Supposedly they stopped and they say, hey, buddy, please, please don't strike. Let's make another deal. So he said, all right, I'll stop, but I'll give him 2 or 3 days. Notice the whole playing with your emotions, not knowing. So 2 or 3 days. When is it gonna be? Is it gonna be Thursday night? Is it gonna be on Friday? Are they gonna not come to an agreement and push it to the weekend? And maybe somebody's gonna strike, somebody isn't. But then you have also the new Fed chairman stepping in. So you would want this to resolve because the shared chairman that the Fed chairman that you want is stepping in. So you cleaning out the mess that you started is gonna make more easier for him to make decisions and jump the more make the jump into flying shit. I was talking about that next week. We have important data, but let me go to Mr. ChatGPT. Actually, let me update. Mm, power, power, detailed update. Make sure you use this as as a example. Example of all right. All right, here we go, you guys. So this is the original that I have, and this was made around 7 o'clock, I believe. Right here, yeah, around 7 o'clock. And just as I talk to it, as I tell it how I like to see the market, what I like to break down everything, ChatGPT puts it in order for me. Anyways, Trump's 72-hour deadline expires tomorrow evening. In the evening, see, this could have been done in the morning. This could have been done at 9 o'clock, 10 o'clock. This could have been done at 12 o'clock. But they're gonna most likely do it after the market closes, and future is gonna react to it. Smart motherfuckers. And then it's either gonna be pushed to the weekend, like, oh no, I don't like the agreement, so guess I'm gonna attack him over the weekend, or guess we're gonna talk over the weekend. Watch. All right, anyways, continue with this shit. Yeah, weekend airstrikes. Yep. Oil spikes, inflation. Could look at oil too. Pay attention to oil. Oil 97. See, it's maintaining. Why? Because tomorrow's a big day, but it's gonna be fluctuating. Oh my god, it's gonna be fucking interesting. And then also the Nasdaq. So look, if you look at the S&P, if you look at the weekly, it doesn't really give you the three candle box. The market, the weeks, it closed pretty much in the same area. Whereas when you go to the Nasdaq, because they're similar. They just move differently, but they're very similar. So you look at the Nasdaq, it created a perfect three candle box, and this is what told me the market is about to explode. Because here we have a three candle box, meaning the first candle, especially in a clear area where there's no other candles around, no resistance, no other coming across. So you have a week. The first weekly gives me the support. The second one gives me the resistance, and then you box it up and you wait for the third one. Normally, the third one, since we're in the weekly, I knew that Monday and Tuesday we didn't have shit. Wednesday and Thursday is gonna be your movers or whatnot. So I knew that if Monday and Tuesday, especially Wednesday, it ended up falling, but ended up coming up in the surface along with what's happening, what data, what's the sentiment, what's What is the market waiting for now? What's so that was the whole truth. It's like, hey, the data came out already. It was good, but it wasn't bad enough to for the rate cuts to be mentioning or get your hopes up. But it was still good for the market. So you move out of the way. Now what you pay attention to is the whole fucking war thing. Is it gonna be over 2 or 3 days? Six, seven, 6, 7. So that's what the market was paying attention to. So as we're coming to the end of the day, it makes sense for the market towards the end of the day, your 10, 11 o'clock, to maintain, break that fucking three candle box resistance, indicate to me that the S&P is gonna do the same thing. And so even though the S&P didn't show me that, I checked the Nasdaq to also tell me what structure do you have a cleaner mode structure. I did the same thing on the 3 monthly when we were having this problem here. I knew that over here and during 2025 when we had the October bullshit that the government shut down, I knew that this area, this gap was very important to signal me a fall or ralliness. The ones that told me this was the Nasdaq checking the monthly. Notice how the S&P was ugly back then. Look at that shit right there. You can't. It wasn't telling you shit. But if you were checking the Nasdaq, it actually gave you a structure. It gave you a support right here. It gave you another support. It gave you this resistance right here. So you box this area up, and you knew where was your selling point, whereas the S&P didn't. So, anyways, that was one way of how I can tell how I can see more accurate if we're falling going up by checking either or. When one is not giving me a good clean move or good clean, um, I know how to say it, but anyways, back to the S&P 500. So since we're hearing that tomorrow is the last day or whatever, whatnot, that's why the market is anticipating and breaking on up. So let's go to the 1 hour candle. Here, the Fibonacci, the auto Fibonacci, what we give a fuck about is the 50 Fibonacci. You want to see where all the 50 Fibonacci from the 1 hour candle to your 12 monthly are, just to see where the market's going to stop, where's the main areas. So what I do, since I have a bunch of bullshit over it, I mark them down with these circles. Every line, every color depends, is tell me, for example, a light blue line is okay. So a purple line is a monthly, a weekly line is a light blue, a daily is a orange, a 12-hour candle is a yellow, 8-hour candle is dark blue, 4-hour candle is red, and that's where you see all these lines coming through. And by me seeing them, I know where the strong support resistance areas are. For example, this weekly. That's why the market today, if you go to this blue line and we have a 12-hour candle, 50 Fibonacci here, and we have a 2-hour candle, a 1 hour candle, a 12-hour candle, and a 15-minute. So since the market was holding above this weekly the whole time, and we were anticipating the data and the war being over, whatnot, or news about the war. And once the market shut up, I knew that if it didn't break at 7:45 to 8:30 before the 4 candle that closes at 10, and we broke this weekly, we were gonna start going on and up. We were gonna start rallying out here, get stuck here, 11, 12 o'clock bullshit, and then continue going up, or come back down or close here, because we're waiting for the news. Then finally, it's funny how this shit works. The data will come out, it won't react to the data then, but at the end it will say the market rallying up because data came out good and so this and so that. The market is manipulated. That's why it's so fucking easy to understand. So instead of me just seeing it how other people see it with their with just their how I tell myself how to see the market this way. So I actually like to visually see where the resistance, the strongest resistance are. For example, this weekly, also I box it up. I dissect the market into sections. So for example, from this weekly resistance, I'll go to the next strongest one, which is this daily one. So I'll make a box from here. From that daily box, I'll go to the next one, which is this 12-hour candle. You see them right here. So I'll make another box. From that 12-hour candle, go to the next strongest one, will be this daily. Along the way, as the market moves, then you'll see all these other ones appear. As the market then comes back down, I'll then see how hard, depending on the color of the line, how hard the mark the resistance or support is going to be and how the market's going to react to it. Also knowing why it's falling down, why it's going up. Is it because of the data? Because is it because it's anticipating something else later on, so it's buying time? Also, for right now, your sweet time is 7:45 to 8:30 and 11:45 to 12:30. Why? Because at 10 o'clock we close a 4 candle. So from 7:45 to 8:30, it needs to make a move. Get out of that get out of that 4 candle. It can't just fucking stay there. It has to move unless it's really, really waiting for something and the market is nervous and it'll just consolidate in the same area for a long time. But since we're not, since we're looking forward to tomorrow because supposedly the war is gonna be over, the market will fucking move. So by 7:45, 12:30, if we don't start breaking down, I know we're gonna continue going up and break into this section right here. We have a 12-hour candle support areas right here, or resistance, I mean. So it's trying to break through that. Also, we're about to close a 4-hour candle at 10. It's 9:28 Arizona time, so the market is gonna try and break through this, and it's gonna close here at 10, or we're gonna leave a wick, come back down, close here at 10, and again from 11:45 to 12:30, we're gonna try to break through this again and close here at 2. And as we anticipate 5:30, 6 in the morning because of the market opening and all that fucking bullshit. So I don't really see it going up overnight that much, because the announcement is gonna be done after the market is closed. We do have data though. We do have data, so that's gonna drive the market up in the morning. That's what they're looking forward to. Well, that's a thing they're looking forward to. You got consumer sentiment, and then plus this fuckface is gonna talk. Also, Warsh, he's gonna be fucking be talking at 8 in the morning, I believe. Let me go to the small time frames. I should see an indicator saying go for buy here. Did I take it out? No, I took it out. Watch. Wrong one, wrong one. There they are. I'll see it. And 2-hour candle, 4-hour candle, all the way down here. It's gonna get it right now. It says right here. Your stop loss, your targets, but it should be entering right here. Maybe since it didn't maintain it for a long time here, it's not getting it, but it should be saying either we're gonna come back down again and then be playing here 11:45, 12:30, break on up and close at 2, or struggle, come back down and close down here at 2. And we anticipate, but as if the market will be scared, something happened over the weekends. I mean, overnight, some headlines, yields going back up, or oils sustaining yield. Yield sustained too because of the war too. So we got 30 more minutes. So either we're gonna close here at 10 or barely here at 10. From 10 to 11, we're gonna play around here, maybe start going down. But as we get to 11:45, 12:30, we should be playing in this box, and then finally breaking up here and close at 2. If we reject and come back down here and close here at 1, then we're gonna come down here and play around and again go up at 5:30 towards like 3, towards like 4, 5:30. As the market data comes out, we break on here if it's good. Because I don't see the S&P really going up through the closing here at 2 in the morning, 7,500 pretty much, and then going back up, testing at 5:30 here for data that the news market's open. Let me check the Nasdaq. Oh, the Nasdaq's right there too. Okay, I can see it happen. I can see it happen. But so that's why I like that's why I like catching the Nasdaq, especially in the weekly, having these 3 candle boxes. That tells me, especially if you know we're coming to the end of the weekend, of the week. I mean, we're having good news. We don't have no really major data in the morning, but we do have it's still important. And just the whole setup and everything, I was like, I like catching, especially when they're weekly or monthly 3 candle boxes. If you know what data's on that week and how the market's gonna react. Alright, guys. So we're coming to 10 o'clock. I'm gonna pass out by around 12, so I'll come back at 12, see where we are. But I see the market, if we do go down tonight, if Asia pushes the market down at 10, Europe, Asia going into Europe is gonna, if we do go down, we're gonna go down, we're going down, down, we're gonna go down somewhere here. And the worst scenario is coming down here, creating support. And then as we get to 3 or 4, we go back here, get stuck in between these daily resistance. Data comes out, we go back up again, and then the market opens and we go up. Some sort of U pattern. Or we're only gonna bring it to this area here and then go back up, get stuck here and go back up. If we close here at 10 and by 11:45 we're actually in, or we're more towards the upside, especially till 12:30, we're gonna end up closing in here and just barely close here at 2 in the morning. That's like your best scenario I could see. I'll be really surprised if we end up, you know, hitting here by 3, 4, 5 in the morning or whatnot. But yeah, that's it. I don't want to keep on saying the same shit. Oh yeah, let me check Bitcoin real quick. That also tells me a lot. Yep, still holding. So like I told you guys, the worst scenario that you have telling you that the market going down is Ethereum. Ethereum on the weekly, first of all, is hanging above a 50 Fibonacci. Second of all, it's also hanging above a 3 monthly resistance. So you have a 3 monthly resistance along with the monthly in the same area. But like I said, you got a weekly 50 Fibonacci. You look at it how it's been holding this whole time. The Ethereum and Bitcoin are synchronized with the S&P 500. The way that they move, even though they look way different in their own way, they tell you how the S&P is gonna move. Notice how tomorrow, or if we close with good news tomorrow, or if we end up with like, oh no, now we gotta push this into the weekend because we couldn't agree to something. Notice how Ethereum and Bitcoin are going to tell you over the weekend if there was a deal on Sunday, because from Saturday night to Sunday morning, you're gonna if we have good news, you're gonna see Ethereum, Bitcoin, and XRP start going on up. If Saturday night into Sunday morning, you'll see Ethereum and Bitcoin start going back down, and you see Ethereum go down to the down here to this blue line, and we start testing this weekly on Sunday night, Saturday night, Sunday morning. We got bad news. The deal didn't come through, or we attacked, and we're gonna start going down. And then the S&P is gonna open lower on Sunday. So that's how, and by being trapped in this box right here, especially in this core, that's how this is telling me that's what it's waiting for. If it would have had bad news tomorrow and you would have seen some sort of deal not gone through, the S&P would have rejected and gone down, you would have seen Ethereum come down here, be playing with this again, just like it was doing this whole time over here. Watch. Once we get good news on, especially on Sunday or especially a Friday, you guys see Ethereum break through this and be up here by Friday noon or Friday evening after once it closes. And then the market is gonna do the whole it is the bottom of crypto and blah 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 blah. And you're gonna see Bitcoin follow through, and they're gonna do the whole it is the start of a rally and da 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 da. Also, because Bitcoin is on its daily trend line. There's a daily trend line right here. Right here stretches out, and that's where it's hanging. So that's how Bitcoin, Ethereum, how that's how they're also telling me right now that yeah, we're also hanging above this weekly resistance for Bitcoin. I mean for support. Let me see where the strong areas are at. Right here, we're stuck between these two. This monthly, this monthly. So we, well, if we have bad news, let's say we have bad news, the war escalates over the weekend and it goes on to Monday, and the S&P actually falls down, you're gonna see Bitcoin come down to 73,850, and then that whole fucking, because even right now, I don't give a fuck how high it went right now. I don't like this. I don't like this weekly fucking high fake out. And if you look with the war situation, yeah, fucking we're coming to the end of it, but look at from their side. They've been fucking getting punked, they've been fucking bitch slapped, they've been fucking humiliated. And the way that this guy talks to them, you really think we're gonna come up to the end of the agreement unless he's in control of this shit and he knows, hey, all right, my guy's stepping in, I gotta make this, fix this up, and that way gas prices are gonna go down, and I'm gonna come as the hero, even though I cost this shit. And you're gonna see Bitcoin hold, then you're gonna go, it's gonna go up to 81, 80, and the market, bigger crypto is gonna be yapping, yeah, 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 yeah. But again, it all depends on the S&P 500 if crypto keeps on fucking rallying. Once we get an AI bubble, some sort of another war, you will see crypto pull back down, especially if once the S&P does that or the Nasdaq, for fucking sure. They're gonna blame it on something else. They're gonna say, think about how many fucking good news there was before when crypto was flying, or even now. How many fucking there was so many good news, but they you wouldn't see react to it fly like crazy or whatnot. But because it follows the S&P 500, it reacts to that. It somehow links together and whatnot. It may look fucking different, just like the Nasdaq and the S&P look different, but they're barely fucking similar. They move at the same time. They shoot up at the same time, go down at the same time, react to labor data, anyways. Let's go also my indicator. This one right here in the bottom. I'm gonna take all this shit off so I can not make it. I wanna see how it is. You guys notice something? For example, they teach you or they tell you to read these pretty much. Hey, if the blue line goes above the orange line, that means volume's gonna go up. And depending what number it is over here, somehow it shows strength or whatever. Um, once it comes to the border, I call this the border, United States, Mexico. So once you come to the border, that's when you lose your momentum and you can really start dropping. But I actually see patterns in here, especially right here. There's a downtrend happening, even though the graph, the market, it was actually doing too. Now that I actually see it, see perfectly. So once the market did this, and this was the same time Trump was gonna fucking did the whole year we were into war. Oh no, we're attacking war. Oh no, Iran is gonna destroy us. Oh no, guns and dynamite, bombs, blah blah boom boom. Oh what, they wanna be my friends now. Hey, okay, we're gonna sign an agreement. Pakistan, oh my gosh, yeah, we're friends now. Okay, no, we're not. Fucking oh yeah, well the deal's gonna be over tomorrow, 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 tomorrow. So once I was able to understand this same structure, you go to, for example, your 1 hour candle. From the 1 hour candle, there's a certain, oh my bad, let me show you the pattern that I was gonna say. Notice this right here. You see how even through the 2005 and all this crazy shit, the market didn't have these crazy big moves. You see what your average was. Some of my move drawings. Look at the average. I'm in the daily right now, so look at the average. The average was here. So that we're in a daily, and that's gonna be orange. So notice how every time pretty much the market would peak, you would hit this price right here or number, the market would peak, go back down, 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 peak, go back down. You get the fucking point. But then once we get to 2016, your next area will be right here. And that was your max. Right in between these two areas, that was a max for years. There's your 2005, 2008 crash. And look how low the market went. So you mark it up just for the future wise. You know when it's a bottom and you can recover on that. Or you know when it's overbought and it's time to sell, and it's oversold and it's time to buy again. So here we come again to the future. Same shit 2018, we had some bullshit with the COVID. Our early stages could have been, or warnings, and again bottom, go back in. But then once you get to here, to COVID, that's when you start getting different numbers now. You start going, the normal becomes this. So every time during COVID, overbought, go down, overbought, go down, overbought, go down, overbought. Unless we had some crazy good bullish news, we started creating these new all-time highs. So then I would then mark it also over here. So then I know these are my all-time high regions for now. This is my mids and this is my lows. But once I got to this area here, so then that's when I do the boxes. What I'll do is I'll get a box and I'll box it up. So once I saw that the war was over, whatever bullshit, but once I saw that we got to this region, we were getting to here, I knew that the market was about to explode because we came to the next volume region. We have never came across this area, even through COVID, this much excitement in the market. So the fact that it was coming to this stage, and if you see how the market was looking then, it was during this time here. And that's when the markets and hedge funds were coming in, doing all the fucking business, scaring us, saying this, blah, 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 war, blah, 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 blah. And then boom, it breaks. It breaks a box and it flies. So what I'll do is, I'll then I'll mark it, but I'll start with the monthly and I'll do the same shit. I'll start fucking seeing where the bottoms are at. All right, this is the monthly. All right, cool. There's gonna be the monthlies are purple, so I'll start marking out the peaks and the lows. Cause I know somehow those areas correlate as you mark now. These for my fucking crazy ass fucking brain. So let me go back. So now you know why I have all these boxes or whatever. In a way, for me, I know whether there some sort of once a volume also. They play out just like you graph and you put your support and resistance on the graph. On the MACD, I started doing the same thing, and I was able to understand it and understand how the market is gonna move depending on the volume where it's at and this and that. So let me go back to show you the small time frames, how I'm able to also know when it's overbought, oversold in the 15-minute time frame. So you see the normal right here. The normal is from here to here to here. And you're gonna see that with this box, and that's why I have 15. So notice right here, every time we come, unless we have some crazy excitement, overbought, sell, overbought, sell, overbought, sell, overbought, sell, good excitement, overbought, sell, overbought, sell, overbought, sell, overbought, sell, you get the fucking point, overbought, sell, and so on, and oversold, buy, oversold, buy, oversold, buy, oversold, buy, oversold, buy, crazy bullshit, chaos. So this is, you have your second overbought area. Overbought, I mean oversold, oversold. That's what I made my bad, you guys. Oversold. You fucking get. So these are my two boxes. Tell me when it's the market has reached overbought and oversold, and then I keep up with it. Oh, why did it go down? Because of that. So then going to your 10 minute, it still works the same way. Overbought, 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 overbought. Unless we have some crazy excitement like the new Fed coming in, like the fucking war, whatnot, the war is over and the new Fed chairman, you're gonna see it explodes. So when there is bad news, I go to my 15 or my 10 minutes and see how fucking deep it went down. If we went down here and here, it's like, oh fuck yeah, you'll get ready to fucking make some call options and fucking do some trades on this bitch. We're gonna start recovering. Also, the same in the 1 hour candle. The more I see the 1 hour candle hit this 15-minute box right here, I know the market's gonna take a while to fucking fly again. But this is pretty much telling me, hey, this is your bottom. Buy in this area, we should start rallying from here. And I know it doesn't make sense because with all these fucking boxes, but like I said, I'm used to it. I'm used to seeing the boxes. I'm used to seeing these colors. I know what they mean. And because I taught myself this shit, so I know people aren't gonna get this shit. It just looks like crayons. I heard all. Um, but I can understand the S&P fucking 500 my own way. All right, back to the S&P 500. Take this bullshit off for now. See the full screen. All right, so it's 9:51. Let's see how we're holding inside the box. All right, we're gonna start. All right, we're inside the box already. We're creating support. Let me see the indicator. The volume's getting weak. We're getting near the border. We should see a U5. Pretty much this. Go up and give it strength. But it's again still too early and still confident. Otherwise, if we were to really start going down by 9 o'clock, we should have done some sort of fake out. Whereas like it pulled out, for example, right here, started going up, and then 9 o'clock, 9:30. Right now, we should do a fake out, pull back, or 9:30, 9:48, 9 o'clock, just pull back, break through this shit, and be down here. And now a bunch of traders get fucking stuck because they thought gonna go up like me, and we start bullshitting this area down here. But since we're expecting the good news and we have data in the morning, it makes sense for the market to start fucking Asia pushing it up, and Asia's showing you it. It's just like Asia did it last night. What was it? Oh yeah, so like right here, market closes, we close high, it opens low, and here comes Asia pushing it up again. Europe sustains it. We wait for the data. What was that data? Thursday? The initial jobless and some other shit. But if you knew what the market was anticipating for the next day, I was like, so cause see, this is how people get they just understand or try to learn the candles, but don't know what's moving it, what's why. I remember when I first started this shit, I couldn't understand the data, I couldn't understand, hey, about the Federal Reserve. I didn't know all this shit, putting it together, whatnot. Now, with the help of ChatGPT, it makes it even more fucking easy to understand this shit. But especially if you think about it, the Fibonacci, think about it, it's a Fibonacci sequence. Somebody thought of putting the Fibonacci sequence and turn it to an indicator. But if you look at it, what made me put these lines was that everywhere these lines are is pretty much a resistance that's already there. For example, here and here, 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 and then you go to your next candle, and the again here, 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 and you go to your next candle. So I started noticing this shit like, yo, this isn't crazy how the Fibonacci like lines are right where a certain support or resistance areas are at. So then that's what made me put my own lines. But then it was too many lines and I couldn't understand how to distinguish this line from that line. So is it a 4 candle resistance, or in general, is it a 4 candle? Is it a 3 hour candle? Is it a daily? So once I started, then okay, you know what I'll do? I'll put different lines representing different time frames. So a 12 monthly will be a dotted yellow line. A 6 monthly is a dotted orange line. A 3 monthly is a dotted purple line. A monthly is a solid line. A weekly is a light blue, and so on and so on. So then I started then dissecting the market, and then understood how the market, depending on what data is coming out, what's the sentiment, what are the headlines, what are we paying attention to. Um, so now you have war, oil, and oil. Pretty much you take out the war, it fixes the oil. So pretty much you just focus on the war, and then the oil tells you where we at. I explained it in my last video how oil pretty much in between 96 and no 92 and 100 we're in peace deals. We're thinking about it, we're talking above 100 we're more closer to war, below 96 getting into 93, 92 we're peace and love, kumbaya, it's peace and love, brother. And then but we're it's still there. But anyway, so it's war. The new Fed chairman, data, and I believe that's it. And then next week, if we still have the war going on or it escalates, we're gonna have war again, oil, oh, and yields. But you take out the war, it fixes the yields in a way. So you have yields, oil, the war, the Fedman, data, all these things. But what we really give a fuck about is the war. That's what's been moving the market. That's what drove the S&P to fly. It's not because, think about it, we were struggling here. I told my friends, hey, the S&P 500 isn't gonna fly. Santa rally didn't happen. The end of December didn't happen. January didn't happen. February didn't happen. And we're coming into March. I was like, get the fuck out of here. We're not gonna fly. We're gonna start going down. We went down only because of war. So war brought all the shit that we needed to liquidate. So they say, hey, let's go into war and liquidate the market. We liquidate the market. Hey, and it got driven up. It got driven up by hopes of the war being over, and it continued. So this whole move has been done by the war, hope of the war being done. All this, not data coming out good, not it's driven by emotions. It's driven by war being over. This whole rally is done by war being over, pushing it and pushing it and pushing it and pushing it, and that's what's causing this rally right now. The war being over, not because of data. The data has been coming out bad. All right, so one more minute, and here we are, folks. Look how much stronger it got towards the end. Now, from either 10, 11 o'clock, we're gonna come down here, end up getting bought in this area, 11:45, 12:30, and we actually start going up around 1, 2 o'clock and just barely close here. If we reject at 11, 12:30, and we start playing here 11:45, 12:30, we're gonna go down, create support here, and then start going up and get stuck in this region, wait for the data, and go back up, sort of shit. If we get attacked for whatever fucking reason overnight, you're gonna see it. We're gonna break this, and we're gonna be down here at 2 in the morning. That's the only reason why that's gonna happen, because we're waiting for data at 5:30. So there's no reason why we'll come all the way down here when you're anticipating data that the Fed cares about. The market always does this. Europe, when Europe knows there's data coming the next morning, it'll move, anticipate into it, even though we were dropping at 2, 3, 4 in the morning. So even though we drop, we'll stabilize at 3 or 4 as the data gets ready to come out. It does this shit all the time. So anyway, you guys, I'm gonna get out of here. I'm gonna come back, like I said, maybe at 12. Uh, Again, the worst scenario that Europe's gonna do is we're gonna bring it down here, then come back up, and then so 60% that we stay in this box, and then 40% that we drop down here, and then this will be something crazy. So Well, I would give it more like a 40, I don't know, 50%, a 40%, and 10% this could happen. Because again, you gotta think why the market is moving. The market is moving because supposedly the war is gonna be over tomorrow. We're anticipating data. Yields are down, oil's down, so nothing overnight is gonna bring the market down. Unless again China has some sort of rating bullshit or Europe, but we're not. It's not gonna do that. The market's gonna hold and it's gonna sustain, and we're gonna end the week in a new all-time high, and then he's gonna be bragging on Memorial Day. The market is up high. The Dow is up. The S&P is up. The so and so is up. Make America great again. All that fucking bullshit. All that fucking bullshit. Why? Because the market is manipulated. Manipulation. How is that fucking shit called? I need to have one of the buttons in here, huh? Manipulation. Anyways, I'm gonna the fuck out of here. Oh wait, let me just show you the rest of this shit. Mm, 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 mm. Four candle block playbook. Most important part of tonight. Your structure works best when tracking the overnight session through the major forward transit blocks. Yup. Why? Because that's where institutions usually reposition, rebalance, and reveal true directions intended. Yup. Your 7:45 to 8:30, it tells you where it's going. It plays with you, but if it, anyways. Tonight's setup fits that perfectly. First major sweet spot, 7:45 30 Arizona time. Debut tonight special. Watch whether it holds above 460. 460 was right here. As you can see, it did. Or starts accelerating below 749. 749. Right here with the 15 Fibonacci's at. Likely determine whether Asia squeeze higher or geopolitical fear starts up. And then finally, your major move, if it's gonna do it, or if it's not gonna do it. Are we gonna really start going up, or are we actually fucking gonna start pulling back because you're scared or whatnot? This is when it comes with Europe. When you have Asia transitioning into Europe, very high, fucking last minute, fucking hey, we're leaving, make your move. Mm-hmm. You have tomorrow data. It's actually at 5:30. No, is it? Yeah, I said no. It's actually at 7. At 7. I'm wrong. I'm wrong. Yes, sir. All right. This is Brian Seacrest signing the fuck out, folks. Whoa.